Hello everyone, welcome to the Bodhi Academy. Today we'll start with chapter 4 of Standard 12th Accountancy PYQ solution, that is dissolution of partnership. So in this lesson we'll learn about different types of account, that is realization account, partners capital and bank account. Dissolution we prepare during the winding up of the company. Okay, winding up of the company can happen because of court order or when the partner become insolvent. That time the partners they can decide to close down the full partnership form. So we'll start with the first question. Anthony and Sutter are partners in a firm, sharing profit and losses in the ratio of 3:2. Their balance sheet as on 31st March 2023 was as under. So, balance sheet, you have to see the trial balance first, and whenever you are preparing the accounts, here they have given the question that you have to prepare realization account, partners capital account and bank account. Okay, so realization account is the first account what you are going to prepare. Second one is partners capital and then the bank account. Okay, bank or cash account. Now in this question they have told us to prepare bank account, so here the name bank account will come. Then so we are going to put everything side by side, all the amount. So first we'll see for the trial balance. So balance sheet as on 31st March 2023 says that liability side we are going to check first capital accounts of Anthony and Sutter. So since it is capital account of partners, so capital account will always go on the partners capital account but on the credit side. Okay, so here we have taken as by balance brought down capital accounts of Anthony and Sutter. Anthony's capital is 10 lakh 20,000. Capital is nothing but the amount which is invested in the business. Then Sutter capital is 8 lakh. Okay, so these things you have to take first in the partner's capital account. And for the realization account, you have to keep a full one page to solve. Then general reserve. As we know that general reserve we have to distribute in the given ratio. Now here there are only two partners, okay, Anthony and Sutter, and the ratio which is given for them is 3:2. So whenever there is a general reserve, you have to distribute that. So general reserve here is 80,000. So what you are going to do is 80,000 multiplied by 3 divided by 5. This will go for Anthony, and another 80,000 multiplied by 2 divided by 5, this will go for Sutter. Okay, so this is Sutter's amount of general reserve. Then Sutter's loan account. Now whenever there is a question of loan account, so since Sutter is an internal partner, loan account of internal partner always go on the bank side, bank account. Okay, bank or cash account. Internal partners loan always go on bank account. Okay, and if it is external partner, so external partner is a liability, so liability you have to pay, so that's why it will go on the realization account. But now since Sutter is an internal partner here, internal partners loan account will go on the bank account. Now, since it is given on the debit side, you have to follow that rule. Whatever is getting debited, you have to credit it. So here it will go by Sutter's loan account as 50,000. Okay. Next, they have given as creditors. Since we all know that creditor is a liability you have to show first that whatever the total amount of asset and the total amount of liability you have to show first in the realization account. Okay, so as it is, you have to take all the amount as given in the trial balance of asset and the liability. Now here we only have one liability of creditors, so directly I am going to take as by sundry liabilities, means the total liability I am going to take creditors as 75,000. Okay, then next I am going to the asset part. Now with regards to asset, here the first step is all the asset you have to write down. So here the asset and the name, the heading what you have to put is to sundry asset. Okay, so the name to sundry asset is going to come. Now whatever the asset, the total asset are there, that you have to write down as it is. Now here in the trial balance, the total asset given is building 10 lakh 30,000, then vehicle 5 lakh 10,000, investment 1 lakh 80, furniture 40,000, goodwill 20,000. Now with regards to goodwill, since it is an intangible asset, here we treat it as a normal asset, okay, with regards to dissolution. Then debtors you have to take 80,000. Now with regards to debtors, here inner column it is given as 80,000 and less provision is given as 5,000. So whenever you are going to write down it in the total asset part, you have to always take the gross amount. Okay. Now here the gross amount of debtors is 80,000. Okay. And provision, we always treat provision as a liability. So provisions by PBDD it will go under credit side. Okay, but we don't mix it up with the liability part. We always show it separately because that's a provision amount. Okay, provision on bad and doubtful debt has 5,000. Then bills receivable. Bills receivable given as 55,000 as it is, you have to write down, and you have to total all the sundry asset which comes to 19 lakh 15,000. Then, with regards to bank balance, which is given in the trial balance, bank balance is the opening balance, and now it will go in the bank account. Okay, as two balance brought down 1,15,000. Okay, after doing all these things, you have to move to the adjustment part. Now, we'll move to the first adjustment. So the adjustment says that on the above date, the firm was dissolved and the following information is available. So asset realized as follows. Now whenever there is a dissolution of partnership, whatever the asset are there, they realize it first, they sell it first. Okay, so you have to follow the rule, like whatever the asset are over here, according to the additional information, whatever the asset you are going to realize, it will come under this side. So here you can see that these are the asset realized. Okay, asset realized or asset sold, it will come under credit side, and that rule you have to remember. Whatever is getting debited, you have to credit it for the next part. So building is realized at 10 lakh 50,000. Then they have given vehicle realized 10% less than the book value. So vehicle is 5 lakh 10,000. On this you have to find out 10%. Okay, and then you have to minus that, whatever the 10% amount you got, you have to minus, so you will get 4,59,000 over here. Then next is investment. Since they have given less than the book value, that's why you have to minus it. Okay, because they have mentioned it, vehicle realized 10% less than the book value. Then investment was sold for a loss of 5%. So this investment 1,80,000 into 5%, it was sold for loss. So since they have mentioned loss, you have to minus that. Okay, whatever amount you are getting, you have to minus, and you will get 1,71,000. Then debtors realized at 60,000. So here you don't have to do any calculation because directly the realized amount they have given as 60,000. So the total you have to do, and the total will be 17,40,000. Total you have to show under the amount column. Okay. Next B part, Anthony took away furniture for rupees 20,000 and Sutter took bills receivable for rupees 40,000. So, with regards to realization account, whenever the first step is you have to write down all the asset, then you have to check for the liabilities. So, liabilities you have to write down, then check for the provisions if any provisions are there. So, that provisions you have to show separately. Then, whatever the asset are realized, it will come on the credit side of the realization account. Whatever liabilities are, you are going to pay the liabilities, right? So, in dissolution, we pay all the liability first after selling all the asset. So liabilities will come under the debit side. Okay, so it's crosswise you have to do. Then whatever the asset taken over by a partner, now furniture and bills receivable or unrecorded asset. Okay, if it is taken over by a partner, then it will come under credit side of realization account. So these are the asset which is taken over by the partner. Okay, asset taken over. So these are the asset taken over by a partner, and whatever the liabilities partner takes, that you have to show under this side. Okay, so this is liabilities. Whatever the liabilities paid by the partner, it will come over debit side of realization account. Now the next information what they have given is Anthony took away furniture for rupees 20,000. Now furniture is of furniture who took, Anthony took, right? So you have to write down under this head by Anthony's capital account, furniture as 20,000. Next, since as I told, additional information has got two effects. Okay, adjustment has got two effects. So now the first effect will come over this side on the realization account, credit side. Now since we have credited this, now it will go under the debit side of partner's capital account. So whatever asset or whatever liability is paid by a partner, you have to show under the partner's capital account. And with regards to, you have to see whether it is being credited or debited. Now furniture is credited. Okay, since it is a asset taken over by a partner, you credit the furniture. So furniture, since we have credited, you have to show under the debit side of the partner's capital account. But since you are transferring it from realization account, the name realization will come over here. Okay, because this is, you are transferring that amount, you are showing the next effect, the second effect. Okay, so it will come over here to realization account as furniture 20,000 under the Anthony's head, because Anthony has taken over, right? So that's why it will come under the Anthony's head. So this is the first step with regards to adjustment, what you have to do. Then Sutter took bills receivable for 40,000. Bills receivable is another adjustment what they have given. Again, the same thing you have to do. You have to write down the heading, who has taken, which partner has taken. Now here, Sutter Capital, Sutter has taken. So by Sutter's capital account, bills receivable as 40,000. Then again, the second effect, you have to show it under the debit side of the partner's capital account. But since you are transferring it from this account, realization account, the name realization is going to come to realization account, and in bracket you can write down for your understanding that it is bills receivable as 40,000 under the Sutter's head, because Sutter took it, right? Then creditors of 5,000 were untraceable and the remaining were paid at a discount of 8250. Now creditors, if I see the creditors 75,000 creditors, the book value of the creditors was 75,000. Okay, creditors, actual creditors were 75, and now the sum of the creditors of rupees 5,000, it is untraceable, they didn't got. So you have to minus that untraceable creditors. So you will get 70,000. But the further part what they have given is, they have given, and the remaining were paid at a discount of 8250. So I have to find out the discount on this. 8,250. So you'll get creditors as 61,750. Okay, 61,750. So this is the actual creditors what they were paid for, because 5,000 were untraceable and then again they were given discount. So these are the actual creditors. So that you have to show it over this side. Okay, to bank account. It means this only one liability was there, creditors, and now you are paying it for 61,750. So with regards to creditors untraceable, you have to show like this adjustment. Then Anthony settled an unrecorded liability of 10,000. So there was an unrecorded liability. Now this liability was not mentioned in the trial balance. In the caution it was not mentioned. So with regards to realization account, you have to remember that unrecorded liability comes under debit side, unrecorded asset comes under the credit side of realization account. So as I told you, whatever the liabilities is taken over or paid by a partner comes under debit side, and asset taken over by a partner comes under the credit side of realization account. Now Anthony settled an unrecorded liability, right? So here the heading Anthony's capital account will come, okay, as 10,000. Since it is paid by a partner, you have to show it under the partner's capital account. Okay, and since it is an adjustment, it has got two effects. So it will come over this side by realization account, Anthony's capital account 10,000. Okay. Next adjustment they have given, dissolution expenses were paid by 8,000 were paid by Sutter, okay, of rupees 8,000. So here you can write down dissolution expenses. If in the caution dissolution expenses are not paid by a partner, then you are not going to show it over here. You are not going to show in the partner's capital. But now in the caution they have mentioned that it is paid by Sutter. You have to show dissolution expenses also of rupees 8,000, that we have already showed it over here. Okay. Then after doing all the adjustment, now you have to come to the totaling part, okay? And now you have to check which side is heavier. Now debit side is heavier with regards to the realization account, and credit side is less. So here I am getting the balancing figure. So balancing figure is 1,14,750. So this balancing figure you have to distribute in this ratio, okay? 3:2 ratio as given in the question. And whatever the ratio you have distributed, that amount you have to put it to the next account, that is partners capital account. As now it came under the credit side, right? So it will go in partners capital account under the debit side as this. To realization account 68,850 and 45,900. Okay. Then again the balancing figure, balancing part you have to do. Now here bank account I have written. Now this bank account is the balancing figure. But the reason why, behind writing the bank account is, now this amount, no, you are going to transfer it to this bank account. So that's why here it can differ. Now in the question they have told us to prepare bank account. Sometimes they will tell us to prepare cash account also. So that time here the name cash account will come. Okay. Now in this question it is bank account. So I have taken as bank. So to bank account. Here, this is the difference what I am getting after minusing Anthony and Sutter credit side. So this difference is 9,89,150, and for Sutter it is 7,54,100. So this is their capital. So that capital, now since it is debited in the partner's capital account, I am going to show under the credit side of bank account. So that rule you have to remember, whatever is getting debited you have to credit. So here it will go Anthony's capital and Sutter's capital account. Okay, and loan account, as I told you, it will go under this side. Okay, then one more part you have to remember with regards to bank account is, now if you see here in the realization account we have put a heading as buy bank account, then again we have put a heading to bank account. So this amount you have to show, the total amount you have to show under the bank account. Okay, now here creditors were debited, right? It was in the debit side, so now it will come under the credit side of bank account. Okay, the next is with regards to the asset, whatever the asset realized, that we have shown under the credit side. So now it will go under the debit side of bank account, okay, as 17,40,000. So this thing you have to show, and the later most important part is you have to tally both the side of bank account, debit and credit, and here the answer is 18,55,000. Both the side is same. Okay, so this is how you have to solve the dissolution of partnership form with regards to realization, partners capital and bank account. So now let's move to the second question, and the second question is, Amar, Ullas and Naresh are partners in a firm sharing profit and losses in the ratio of 2:2:1. So now in this question there are three partners and they are sharing the ratio in this 2:2:1. Amar, Ullas and for Naresh. So Amar, Ullas and Naresh. Okay. Now their balance sheet as of 31st March 2023 was as under. So we'll move to the first trial balance, and as we know that in trial balance we write down as it is from in the realization account. So first you have to check for the asset. Now asset given here are plant and machinery 7 lakh, then furniture 3,20,000. Then Hero Honda 1,40,000. Sundry debtors. Now sundry debtors they have given 2,20,000 less provisions they have given, that is 20,000, and the net amount is 2 lakh. So whenever you are solving the realization account, you have to always take the gross amount, and here the gross amount is 2,20,000. So that amount you have to take. Then bills receivable 60,000. So the total amount you have to show on the outer side, that is 14,40,000. Then with regards to cash balance, it will now here they have given as cash balance and they told us to prepare the cash account. So here I am writing as cash. Okay, cash account. Here also cash account will come. Okay. So cash account, they have given the opening balance as 40,000. So two balance brought down you have to write down. Then now we'll move to the liability side. Capital account of Amar, Ullas and Naresh. So capital account shows the balance of 4 lakh, 4 lakh and 2 lakh thousand. So capital will come directly in the partner's capital account on credit side. Okay. Now, with regards to sundry creditors, okay, sundry creditors and bank loan. Here, sundry creditors are given as 80,000 and bank loan is given as 2,80,000. Okay, so since both the thing are liability, you have to show under this head by sundry liabilities, and the total will come as 3,60,000. Then, with regards to the provision of debtors, you have to show always separately. PBDD you have to show separately, which is 20,000. Okay. Then next is general reserve, that what they have given. So as we know that we distribute general reserve in this ratio, okay, partners ratio. So general reserve, the total amount they have given as 1 lakh. So what you have to do is, here if you see 1 lakh, the total amount of general reserve is 1 lakh, multiplied by, you have to take the now you have to take the Amar's ratio first. Amar's ratio is 2 divided by 5, you will get 40. Similarly, you have to do for Ullas, again 40 you will get, because the ratios of both are same. Then for Naresh, you have to find out 1 lakh into 1 divided by 5, so you will get this 20,000. Okay, so after doing every adjustment from the trial balance, now you have to move to the additional information. Now, additional information says that on the above date, they decided to dissolve the firm and the following information is available. Asset realizes under. So now whatever the asset are realized, we show under this side, credit side. So this is asset realized. Now, the asset realized are plant and machinery for rupees 6,30,000, furniture at 110% of the book value. So furniture here, the book value is 3,20,000. You have to find out 110% on this amount, which will give you 3,52,000. Okay. Then debtors at 2 lakh, bills receivable they have given at book value. So bills receivables book value is 60,000. So directly 60,000 will come over here, and the total you have to take as, you have to total all this asset, and it will be 12,42,000. Next adjustment says that Amar took over Hero Honda. Now Hero Honda is an asset, right? He took it for 1 lakh, okay, and agreed to pay the bank loan with an interest of 20,000. So first adjustment we'll do of asset, and then we'll move to the liability part. So since Hero Honda is taken over by Amar, you have to write down his heading by Amar's capital account. So this you have to write down. And he took Hero Honda, so that's why I'm writing it in bracket. He took it for 1 lakh, okay. Then the next effect will come under the debit side of partner's capital account. So here he took Hero Honda for rupees 1 lakh, okay, or you can write down here as Hero Honda, okay. Since it is a motor, you can write down motor or Hero Honda, okay, direct name you can write down. So he took it for 1 lakh. So now I'm showing the second adjustment over here, second effect. Then next, it is said that bank loan he also agreed to pay with an interest. Now earlier bank loan was 2,80,000. Since he is paying it with an interest, you have to add that interest. Okay, now interest amount is 20,000. So you have to add 2,80,000 plus 20,000. You will get 3 lakh. Okay, so here I am showing this with interest. So this is very important. The next is expenses of dissolution amounting to 10,000 is paid by Nourish. So since this 10,000 is dissolution expenses, and it is paid by a partner for 10,000. Since it is paid by a partner, you have to show under the partner's capital account. Here it will go as dissolution expenses, okay, on the credit side, 10,000, and bank loan also have to show as 3 lakh under the partner's capital account. Then there was an unrecorded computer of rupees 30,000 which was taken over by Ullas at rupees for the same value. Okay, so there was a unrecorded computer. Since as I told, whatever the asset is taken over by a partner, you have to show under credit side of realization account. So you have to show it over here, okay, on the credit side. So this is the credit side and this is the debit side. Okay, so It is taken over by Ullas. So heading will come as by Ullas capital account. He took it for 30,000. And the second adjustment, whenever you are passing, you have to show it under the partner's capital account since the partner is taking that particular asset. So it will come over here by realization account. Okay, and in bracket you can write down it as computer. Okay, for rupees 30,000. So after this you have to do first part is you have to balance the realization account and you have to check which side is heavier. So here I am getting on the credit side, we are getting the balancing figure. So this you have to distribute in this ratio 2:2:1 as given in the question. Okay, 2:2:1. Okay, so 78,000, how you are going to calculate this? 78,000 multiplied by 2 divided by 5, you will get 31,200. Similar amount will come for Ullas because his ratio is also same. But for Naresh it will change since his ratio is 1. So 78,000 multiplied by 1 divided by 5, you will get 15,600. Okay, and then this amount you have to transfer it to the second account, that is partner's capital account. Now it came under the credit side, here you have to show under the debit side. So that rule you have to remember, whatever is getting debited you have to credit it. So now we are credited it on the debit, we have transferred it to the partner's capital account under the name realization account because you are transferring it from realization account. So the name realization account will come, and this is that this balancing figure from realization account. Now again you have to move to this part, partner's capital account. You have to check which side is heavier. So you have to check where you are getting the balancing figure. So this is the balancing figure of both the partners and you have to put the name as by cash account. So this amount is the capital figure of all the three partners, so that you have to transfer it to the credit side because it was under the debit side, no? So again that rule you have to follow, whatever is getting debited it will come over this side as by Amar's capital account, by Ullas capital and Naresh capital account. Okay, one more thing you have to remember, whatever you have put under this bank head or bank account or cash account, okay, bank or cash account, you have to transfer it to this account. Okay, here bank or cash account. So now whatever here we have debited creditors, now here you have to show as credited. Okay, then here we have credited all the asset, whatever asset were realized, here you have to show as debited to realization account. These are all the asset sold, asset realized for 12 lakhs 42,000. Okay, so here you have to remember that whatever the asset is taken over by a partner, that there is always a second effect for that, and you have to show under the partner's capital account. And with regards to general reserve, you have to distribute in the old ratio. Third question is, Amar, Amol and Abhijit are partners in a firm sharing profit and losses in the ratio of 2:2:1. So now the ratio is 2:2:1 of Amar, Amol and Abhijit. Then their balance sheet as on 31st March 2023 was as under. So here first they have given the capital account. Capital accounts you have to show under the partner's capital account. And capital balances of all the three partners showed as Amar is 95,000. Then of Amol it is given as 85,000. With regards to Abhijit's capital, they have shown under the asset part. So we are going to transfer it to this account, this side, that is debit side, because they have shown under the asset part of in the trial balance. So here it will come as 13,000 because their Abhijit's capital is 13,000. Then general reserve, of course we are going to distribute with this ratio 2:2:1 with the old ratio with 8,000, 8,000 and 4,000. General reserve total amount is given as 20,000. So 20,000 multiplied by 2 divided by 5 you will get for Amar. Then Amol also will get the same, and Abhijit it's 1 divided by 5. Then with regards to creditors and the outstanding rent, it is a liability. So creditors and outstanding rent you have to show under the separate account, that is realization account it will go. So all the liability and asset you have to show under the one side. Okay, so liabilities we are going to show under credit, and asset, all the asset you have to show under the debit side. Then now we'll move to the asset part. Machinery is 70,000, furniture 35, stock it's 40,000, then investment 50, debtors directly they have given the amount as 40,000 here. So the amount, so the total amount you have to, so you have to calculate total sundry asset, which comes to 2,15,000. Then bank balance, we always take the bank balance under this account, bank account. So two opening balance, two balance brought down as 5,000. Since it is given on the asset side, you have to show under this account under the debit side, and that two effect you have to remember. Whatever is getting debited, you have to credit. Okay. Now we'll move to the additional information. So they are telling that asset realized as under machinery rupees 41,000. It is realized for 41,000. Then debtors at a discount of 20%. So debtors earlier it was 40, and now you have to find out it 20% on that amount. So 16,000. Then furniture for rupees 19,600. Direct amount they have given. Then now, only this information they have given with regards to machinery, debtors and furniture. Now, from this we took machinery, debtors and furniture. Now, stock is left. And with regards to investment, for the further information they have given that investment is taken over. Okay, investment is taken over by Amar. That's why we didn't took under this head by bank account, because it is already taken over by partner. With regards to stock also, they have given us the information that it is being taken over by partner, that half amount is taken and the remaining part of you have to realize. Okay, so this additional information they have given for the further part. So as of now we are going to we saw machinery, furniture and debtors. Okay, now we'll move to the next part. Realization expenses amounted to 2,400. Now this was paid by Amol. Okay, so I am going to write down here as to Amol's capital account. Realization expenses 2,400. So now since it is paid by a partner, you have to show under the credit side of your partner's capital account. But since you are transferring it from this account, realization account, you have to write down by realization 2,400. Okay, expenses. Then next, Amol took our investment for rupees 40,000. So Amol took our investment for rupees 40,000. Then he agreed to pay the creditors and outstanding rent at book value. So Amol is going to pay the creditors and outstanding rent. At book value means at the same value. Now here 18,000 was Sunday creditors. Outstanding rent is also 15,000. So at the book value means at same value he is going to pay the outstanding rent and creditors. Okay, he is going to pay the liability. The next part is with regards to stock. Now stock was left. So 40% of the stock was taken over by Amol at 90% of the book value, and the remaining stock is realized at 110% of the book value. Now if you see the actual amount of stock in the trial balance, they have given stock as 40,000. That is the actual amount of stock. Okay. So stock we have for 40,000. So it means this is the 100%, the full amount they have given us. Now what the additional information says that 40%. So out of this 100, 40% was taken over by Amol. Okay. So on this you have to find out 40%. But it was taken over by Amol for 90% of the book value. Okay. Now 90% of the book value, so you'll get 14,400. Then next, he pay and the remaining stock realized at 110%. So here out of 40, how much is remaining? 60% is remaining. So on 40,000, the first part is you have to find out 60%, and then you have to find out 110% of on that particular amount, whatever amount you will get on 60%, on that amount you have to find out 110%. Okay, so this now it is realized at 110. So this 26,400 is that realized amount. Okay, then after doing all this adjustment, you have to see for the Amul's capital account, stock is taken over by Amul, so you have to write down our debit side of partner's capital account as stock. You can even write down this in the bracket. Then Amul's capital investment you have to show here as 40,000 in the partner's capital. Then with regards to dissolution expenses, as I said, it is since it is taken over by a partner, again it will come under the partner's capital account under the head by realization account, and in bracket you have to write down dissolution expenses. Then with regards to whatever the asset realized, now this is with regards to asset sold, it will, you have to show under bank account, but it will go under this head to realization account because you are transferring it from realization account, right? So here you have to write down 1,03,000. Then after doing the calculation, you have to see which side is heavier. So here on credit side we are getting the balancing figure as 60,000. Now this amount you have to distribute in the old ratio of partners, and old ratio of partner is 2:2:1. So you'll get 24,000 for Amul and Amar and Amol, since their ratio is same. And for Abhijit it will differ because you have to do 60,000 multiplied by 1 divided by 5. You'll get 12,000. Okay. Then whatever the amount you have to show it under the partner's capital account because this is their share. So this will come under debit side because now in realization account it is on credit side. So here it is going to come. Okay, to realization account 24 and 12,000. Again here in partners capital account we are getting the balancing figure for Amar and Amol as 39 and 90,000, but for Abhijit we are getting the balancing figure on the credit side. So it's like you can get balancing figure on both the side, okay, debit or credit side of partners capital. So now that rule you have to follow, whatever is getting debited you have to credit. So see the two bank account of Amar and Amol we have credited, okay, as by Amar's capital account and by Amol's capital account, okay. Then realization, since we don't have any liabilities over here, since it is taken over by a partner, we directly show under partner's capital account, so no liabilities will come under this account, bank account. Now 21,000 is the balancing figure that of Abhijit you have to show under debit side because balancing figure of Abhijit we got on credit side. So these things you have to keep in mind while solving the realization, while solving the full dissolution sum. So the fourth question is, Azhar, Imran and Shahid are partners in a firm sharing profit and losses in the ratio of 6:3:2. So this is the ratio of Azhar, Imran and Shahid. Azhar, Imran and Shahid. Okay, their balance sheet as follows. So capital account of Azhar, Imran and Shahid is given as 1,20,000. Imran is also 1,20,000 and Shahid is 1 lakh. Then creditors bank overdraft, this is the liability. So liability directly you have to write down on the credit side of realization account as 47,000 and 78,000. Then next, Abdul's loan account. So now Abdul is a external liabilities. Abdul's loan account you have to show separately. Then as 35,000, it is the Abdul's loan account. Then next, we'll move to the asset part. Asset part, they have given land and building, then machinery, furniture, stock, joint life policy. So it is considered as asset, then debtors and profit and loss account. So with regards to asset, we are going to take land and building, machinery, furniture. So all the asset you have to write down on one side. So and you have to tally, you have to total the full asset side. Then profit and loss account, like how we distribute general reserve, similarly you have to distribute profit and loss account. Now it is given as 22,000. So since it is given on the asset side, profit and loss account will come under the debit side of partners capital account. Since we distribute this to the partners, it will come over this side, debit side, okay. Now since here it is given on the asset side, so now it will come under the debit side of partners capital account. So here you have to distribute this in this ratio 6 So profit and loss total amount they have given as 22,000. So what you have to do is 22,000 multiplied by 6 divided by 12. Then here again 22,000 divided by 3 you have to do for Imran, and similarly you have to do for Shahid. So according to the ratio you have to take. Then after this we'll move to the bank balance. Bank balance we always show on this account, bank account. So two balance brought down as 10,000. So side by side you have to prepare all the three accounts: realization account, partners capital, and bank account, since there are two effects. Okay, now we'll move to the additional information. And additional information says that on the above date they decided to dissolve the firm and the following information is available. So now the first is Azhar took over stock at 120% of the book value. Okay, of the book value means now here the book value is 80,000. So multiplied by 120% you have to find out, which you will get the 96,000. Okay, so this is Azhar's capital account. Since it is taken over by a partner, you have to show like this under his head. Then this you have to show under the debit side of Azhar's capital account as 96,000, and in bracket you have to write down the stock. Imran took over joint life policy at 8,000 less than the book value. So if you see, joint life policy is 28,000 and now Imran is taking it at less than the book value. So here he is less than the book value, and the direct amount is given as 8,000. So here you have to minus 28 minus 8,000, you will get 20,000. So this is the Imran's joint life policy which he has taken. And then the second effect you have to show under the partners capital account. Okay, then next, other asset realized as follows: land and building, it is realized at 1,50,000. Patent and trademark also they have given. Then they have given debtors, bad debts amounted to 8,000. So by BBDD you have to show, which on that you have to allow a discount of 10%. So on debtors you have to find out a discount. So first, since they have given bad debts which is amounted to 8,000, so from debtors you have to minus this 68,000 minus 8,000, 60,000, and on 60,000 you have to find out 10% on that. Okay, so it's like this. Now the actual amount of debtors is 68,000 and we have got bad debts of 8,000. Bad debt is the amount which is not going to recover, so that's why we have to minus. So 60,000. On this 60,000 you have to multiply 10%, means discount, so you'll get 6,000. 60,000 you have to find out 10% discount, so it will come as 6,000. So 60 minus 6, 54,000, and so debtors are realized here for 54,000. This is how you have to show. Then Shahid took over the machinery for 78,000. So machinery is taken over by Shahid. So whatever asset is taken over by partner, you have to show under the credit side. Okay, so 78,000. Then and agreed to pay the bank overdraft with an interest. So he is paying the bank overdraft with an interest of 8,000. Earlier bank overdraft was 78,000. Now he is paying with the interest. So I have to add bank overdraft with that. So the total is 86. Then Abdul agreed to accept 29,000 in full settlement of his account. Next part they have given realization expenses amounted to 10,000. So I have to show the realization expenses for 10,000. Okay, and creditors you have to write down over here as 47,000. Then after that you have to tally the debit and the credit side. So here we are getting the answer as 70,000. Now on this 70,000 you have to multiply and find out how much is the profit for each partner, Amar, Imran and Shahid. So you have to do 70,000 into 6 divided by 11, you will get 38,182. So this amount again you have to transfer it to partners capital account. Now it came on the credit side, so you have to show it under the debit side. Okay, so on debit side, as realization to realization account, you have to write down 38,182. Now this is the amount which we are transferring. This is from the realization account. That's why this amount came. And with regards to whatever is taken over by a partner, that also have to show over here. Okay. Now Imran and Shahid's capital balancing figure we are getting on the debit side. and you have to check again here for whichever side is heavier. For Imran and Shahid, we are getting balancing figure on debit side, and for Abhijit it's and for Azhar it is over here. Okay, so this is balancing figure of Azhar. So here total you have to write down, that is 1,46,182, then 1,20,000, then 1,86,000 on both the side. Then after this, whatever the balancing figure you are getting on partner's capital account, you have to transfer it to the credit side, because this is on debit side, right? So debit side balancing figure will come over this side as by Imran's capital and by Shahid's capital. Okay, then with regards to Abdul's loan, it is given in the trial balance, so that also you have to show it under this side. Then with regards to Azhar's balancing figure, it will come over here, okay, on debit side, because it is being credited, right? Whatever is getting credited, you have to debit for the next account. So 26,182 will come over here, and this realization account 2,16,000 is the bank account from realization account. So this we have taken as by bank account. So whatever we have put under this heading now, that will come under by bank account. Okay. So 2,16,000 is the asset which are realized. So this whatever asset are realized, that also have to show under this account. Okay. So this is the asset which is realized. So that will come under the debit side, because over there it is on the credit side of realization account. Later on we have to tally both the side, and we are getting the answer as 2,52,182. So this is how you have to solve the realization account under dissolution of partnership. So now we'll move to the MCQ part, and the first MCQ is, which of the following accounts will be debited when a partner takes up the responsibility of paying one of the liabilities of the firm? So the options given here is partner's capital account, realization account, liability account, or cash or bank account. So the correct option is realization account. Next, on dissolution of firm, creditors were recorded in the books as 95,000. Okay, so the creditors are 95,000. Now, next part they have given 5,000 were untraceable. So what we'll do, 95,000 minus 5,000, which will give us 90,000, and the remaining were paid at a discount of 15%. So whatever 90,000 we got, on that we are going to find out 15%. So the question is, how much amount will be paid to the creditor? So the amount which is paid to the creditor is 76,500. Next MCQ, at the time of dissolution of firm, at which stage is the balance of partners' capital accounts paid? So options are after making the payment of third party, before making the payment of partners in respect of their loans, none of the above, or after making the payment to third party for their loans as well as party's loan. So the correct option is after making the payment to third party for their loans as well as parties' loan. Next, on a firm's dissolution, which one of the following accounts should be prepared last? Is it realization account, partner's capital account, partner's loan account, or cash or bank account? So the correct option is cash or bank account. So whenever we have solved the question, first we have prepared realization, then we have prepared partner's capital, and at the last we have prepared cash or bank account. Okay, so the correct option is cash or bank account. Next, which of the following is not transferred to realization account? Options are balance of cash account, balance of reserves, balance of profit and loss account, or all of the above. So the correct option is all of the above, because all these three things we don't transfer to realization account. Okay, so if you see balance of reserve account we have not taken in realization account, but we have distributed in partner's capital account as by general reserve or by profit and loss account. Then balance of profit and loss account also we have not taken in realization account, but we have distributed in partner's capital account. Okay. Then balance of cash account also we have not shown under this account, but directly we have put under this head as to balance brought down under bank or cash account. Thank you for watching the video. Do like, share and subscribe.